Most blockchains compete to be the fastest, the cheapest, or the most hyped. Cosmos asked a different question entirely. What if the real problem isn't any single chain, but the fact that none of them actually can talk to each other? And so, Cosmos became the protocol that built the communication standard for blockchains before most of the industry understood why one was needed. And today, the token of Cosmos, Atom, sits roughly 95% below its all-time high at $1.90 per token, with a market cap of a little bit under $1 billion. So what does actually happen here? Why does a project that built the infrastructure for the entire multi-chain industry trade under a $1 billion market cap? And what's the opportunity for us investors? That's exactly what we're going to answer today, along with the math on how many Atom you would need to retire as a millionaire. Before we continue, a quick reminder for you to subscribe to the channel if you haven't done so yet. Well, let's go into Cosmos. This is not financial advice, always do your own research. The year is 2014. Bitcoin is still the whole conversation, and every new blockchain that launched was essentially a remote island. No two chains could communicate. No assets could move without a centralized intermediary. Then two guys, Jay Kwon and Ethan Buckman, looked at that problem and wrote the answer into a white paper in 2016. A network of distributed ledgers connected by a shared communication protocol. An internet of blockchains, if you like. Cosmos promptly raised around $17 million in an ICO in April 2017 in under 30 minutes. Mainnet launched in March 2019, and in April 2021, the Stargate upgrade activated IBC, which stands for the Inter-Blockchain Communication Protocol, turning the vision into working infrastructure. The technology stack comes down to three important things: the Comet BFT consensus for fast finality, the Cosmos SDK for building sovereign chains, and IBC for connecting them. There's no single congested base layer, but each chain specializes, scales on its own terms, and communicates through the IBC. That is how Cosmos was designed to scale through architecture and not just by cramming everything into a single chain. Not everything went smoothly though. Around 2020, co-founder Jay Kwon stepped back from the project amid serious internal disagreements. Then, in 2022, the community attempted Atom 2.0, a sweeping redesign of the tokenomics, value capture, and treasury structure. The proposal failed, but many analysts point to that failed vote as the beginning of Atom's prolonged underperformance. At the beginning of last year, Ethan Buckman stepped down from the Interchain Foundation Council too, and today the ICF is led by other people: Josh Cincinnati with Barry Plunkett and Magnus Marinek. In January this year, Jay Kwon, one of the two original co-founders, publicly argued that parts of the ecosystem had lost its direction. To what degree? We'll find out by the end of this video. Now let's look at the tokenomics. And this is where Cosmos has one of its biggest problems. Atom has no hard supply cap, which means that there is no fixed maximum number of tokens. Unlike Bitcoin, Cosmos keeps creating new Atom through inflation. Right now, the staking ratio is about 63%, but the network's target is 67%. Because staking is below that target, inflation is running at nearly 12.6%, which means holders are still being diluted. Currently, the circulating supply is approximately 510 million Atom tokens, and with the price at $1.90, the market cap is just under 1 billion. Staking yield is around 20%, which helps offset some of that inflation, sure, if you stake your coins though. But there's a catch. Once you unstake, your Atom is still locked for another 21 days, so you cannot move it right away. Two things are changing though. First, Cosmos Labs has started a tokenomics research process that could eventually shift Atom toward a fee-based model instead of relying so heavily on inflation. But that has not been approved yet. The second change is already live. The IBC Eureka that launched in April 2025 burns a portion of the fees that pass through the Cosmos Hub. That burn is still small, but it is the first real burn mechanism Cosmos has had, and it grows as usage grows as well. So I think it's a move in the right direction, let's put it so. But here is the most important question any Atom investor has to answer. Does Cosmos' success make Atom more valuable? The honest answer, not automatically. Cosmos built the railroad, sure. After all, DYDX, Injective, Osmosis, Akash, and dozens of others run on Cosmos SDK and use IBC. But their success doesn't flow directly to Atom holders. That was the core argument behind Atom 2.0. And since that proposal failed, the value capture gap remains the central investment thesis risk. The answer Cosmos has built is Interchain Security. What this means is that chains like Neutron and Stride borrow the Cosmos Hub's validator set for security and pay rewards back to Atom stakers in return. Neutron recorded its highest message throughput in February 2026, while Stride grew its unique delegators by 34% in Q1 of the same year. This is one mechanism that turns the success of Cosmos into actual Atom value. And in my estimation, it is real, it is growing, but it is not yet large enough to dominate the thesis. On the interoperability side, I mentioned that IBC Eureka launched in April 2025, and what it does is connect Cosmos to Ethereum directly through light clients without any third-party bridge. Over 115 active chains currently use IBC, and the latter's code base has been deployed by over 200 chains historically. Some examples include Noble, which powers USDC infrastructure across the ecosystem, Babylon and Osmosis, which process over $127 million in monthly DEX volume as they continue building. But the honest picture is actually that there are shutdowns of Comdex and Evmos and others. Developer activity has also declined roughly 21% since 2023. What's more, Say, which was built on the Cosmos SDK, is now considering dropping Cosmwarm entirely for a full EVM pivot. So all that is to say, guys, that the Cosmos ecosystem has real momentum in some corners, but also real contraction in others. Now it's time to address the risks of investing into Atom. First is the persistent inflation with no confirmed fix. See, Atom has no hard supply cap, and annual inflation can run up to 10%. A tokenomics overhaul was proposed but did not get passed. Until it is voted, guys, and passed through on-chain, Atom is a constant dilution asset competing in a market that values deflation. I mean, if we wanted inflation, we would go to the dollar, because there's plenty there. The second risk, in my opinion, is the value capture gap. Cosmos' greatest technical achievement is that other projects use its infrastructure, but that still does not reflect in the token price. Atom 2.0 was supposed to fix this. It failed. We move on. At number 3 in the risks, I put the ecosystem contraction. As I pointed out, multiple prominent chains have shut down or pivoted away. Developer activity is also down. Ultimately, the ecosystem need ICS to fill that gap faster than projects are leaving. Fourth, and I will illustrate it with the gravity bridge exploit that just happened, which is not the risk itself, but a symptom. Follow me here. On May 30th, just days ago, a suspected signing key compromise led to a $5.4 million exploit on Gravity Bridge. The Cosmos Hub itself was unaffected, but cross-chain infrastructure inherits the risks of every chain it connects to. As IBC expands to Ethereum and Solana, the attack surface grows, and that's the risk. And the final thing we need to be aware of is the regulatory exposure. Look at this. Atom is tagged as an alleged security on CoinMarketCap. Although US crypto laws have become clearer in 2025 and 26, especially for stablecoins and some major digital assets, Atom still has not been explicitly categorized the way some other coins have. That means the SEC risk is lower than before, but it is not completely gone. Just before we dive into how we can become millionaires with Atom, let's look at the price history very quickly. Cosmos launched its ICO at around 10 cents in April 2017, Then later on, the mainnet listed at roughly $6.50 in March 2019. The price hit its all-time high of $44.70 in September 2021, but understandably collapsed through the bear market and reached a multi-year low of around $1.64 in April 2026. Today, it sits at approximately $1.90, and I'll be using this price for the maths across 3 Millionaire scenarios. Starting off with the bear case, which sees Atom trading at $10. That would be nearly 5.5x from today, as the market cap goes beyond $5 billion. Now, to reach $1 million in your portfolio, you need 100,000 Atom tokens, costing roughly $190,000 today. The second scenario is my base case, and it is twice as good with $20 per Atom. This is merely reclaiming the all-time high for a 10.5x return. The market cap then reaches around $10.2 billion, 50,000 Atom tokens, guys, for around $95,000 today to potentially attain that millionaire status later on. At the end comes the most optimistic bull case, with the price reaching the astonishing $44 per token. 23x return on investment, with the market cap going to $22 billion, which is still well below Solana's current valuation, for instance. You need a bit less than 23,000 Atom for a total cost of $43,000 today. That's as profitable as it gets, really. So, we've got the millionaire talk going on, but what could move Atom to these levels? 4 things might prove vital here. First, IBC Eureka plus the Solana and the Layer 2 expansions turn Cosmos Hub from a Cosmos-only router into the connective tissue of the entire multi-chain industry. Second, the tokenomics overhaul. If passed, it would be the most significant shift in Atom's investment case since launch, narrowing inflation to anywhere from 2 to 6%, while adding a fee burn model changes the math for those of us who want to be long-term holders. The next on the list of factors that could propel Atom holdings to, $1 million, where we want them to be, is the Interchain Security growth. Every new consumer chain that joins adds fee revenue and validator demand, which ultimately flows back to Atom stakers. This is the value capture mechanism Cosmos has been building toward. And lastly, a necessary one, the gravity bridge recovery. Rebuilding trust in cross-chain security after the May 2026 exploit matters quite a lot for the potential institutional adoption of the IBC infrastructure. So that's the full picture, guys. Cosmos invented the Internet of Blockchains in 2014. It built the communication standard that now connects over 115 active chains. And today, it trades for less than what it was listed at on day one of its mainnet. I guess now it all comes down to answering this question: is that the setup of a decade-long opportunity, or is it what happens when a technology is genuinely important, but the token never finds a clear way to capture the value that it creates? We'll find out eventually. But before that day comes, I want to know your Atom price targets for 2026 in the comments below. I know a few years back, I was quite excited, I would say, about Cosmos. Nowadays, I still use it occasionally, but I'm wondering if you're rooting for it. So yeah, tell me about your experience with Cosmos in the comments, and if this breakdown was interesting to you, then don't forget to hit the like button and subscribe. And if you have a friend who thinks Atom is just another forgotten altcoin, then share this video with them. Thanks for watching. I'm Stan, and I'll see you next time here on airdrops.com. Ciao.